Hello everyone, welcome back to my YouTube channel. Today, we are discussing the latest developments surrounding the Vietnamese Dong, the growing online speculation about exchange rate changes, and the recent warnings issued by financial institutions and law enforcement agencies regarding so-called currency revaluation investment schemes. Over the last several months, interest in the Vietnamese Dong has increased significantly across online investment communities, social media platforms, and foreign currency discussion groups. Many people have been hearing rumors claiming that the Vietnamese government may suddenly reset or revalue its currency, causing the Dong to dramatically rise in value against the US dollar and other major world currencies. However, recent reports from authorities are urging investors to remain cautious and to separate verified financial information from unrealistic claims spreading online. According to a news release from the BCSO, a local financial institution has reported a rapid rise in customers requesting to purchase Vietnamese currency. Authorities say many of these requests appear connected to online claims that the Vietnamese Dong will soon experience a massive increase in value. The report explains that scammers are allegedly telling investors that foreign currencies are about to be reset or revalued by their governments, making them suddenly worth far more than their current exchange rates. These promotions are often presented as low-risk, high-reward investment opportunities that supposedly guarantee extraordinary profits in a short period of time. The BCSO warns that the reality behind these claims is very different from what is being promoted online. Officials say the idea of a sudden overnight revaluation, creating instant wealth for investors, is extremely unlikely, according to mainstream financial experts and economists. Authorities further explain that even if Vietnam's economy continues growing strongly over the coming years, changes in currency value would likely happen gradually, rather than through one massive overnight jump. Financial investigators also warn that many scammers use emotional marketing tactics designed to create urgency and excitement among inexperienced investors. Over the past few years, Vietnam has become one of the fastest growing economies in Southeast Asia. International companies have expanded manufacturing operations throughout the country. Exports have increased steadily, and Vietnam has strengthened trade partnerships with several major global economies. These economic successes have contributed to growing international interest in Vietnam and its currency. However, professional economists continue emphasizing that strong economic growth does not automatically lead to an immediate dramatic increase in currency value. Currency exchange rates are influenced by many complex factors, including inflation, interest rates, trade balances, foreign reserves, government monetary policy, investor confidence, and global economic conditions. The Vietnamese government and the State Bank of Vietnam have historically managed the exchange rate carefully in order to maintain economic stability and support export competitiveness. Sudden extreme currency appreciation could actually create serious challenges for exporters and manufacturers by making Vietnamese goods more expensive in international markets. Despite these economic realities, online rumors surrounding the Vietnamese Dong have continued spreading rapidly across social media and video sharing platforms. Some online promoters claim that secret agreements, international financial reforms, or hidden government plans will soon cause the Dong to rise dramatically in value against the US dollar. Many of these videos and posts include sensational headlines promising life-changing wealth, financial freedom, or historic currency events. Financial authorities say investors should approach such claims with caution and rely on verified information from official economic sources instead of internet speculation. According to financial analysts, one reason these rumors continue attracting attention is because Vietnam's economy genuinely has shown impressive growth over the last decade. The country has emerged as a major manufacturing center for electronics, textiles, footwear, and technology products. Global corporations continue investing billions of dollars into Vietnamese factories and infrastructure projects. International trade agreements have also expanded Vietnam's access to global markets, helping the economy grow rapidly. Compared to many other developing nations, Vietnam's strategic location in Asia has further increased its importance in global supply chains. As multinational companies seek alternatives to concentrating manufacturing in a single country, Vietnam has benefited from shifting production operations. Industrial parks continue expanding. Transportation infrastructure projects are accelerating, and foreign direct investment remains strong. Many economists believe these trends could support gradual, long-term strengthening of Vietnam's financial position over time. However, experts repeatedly explain that long-term economic development is very different from the type of overnight currency reset stories often promoted online. In real financial systems, governments and central banks rarely allow sudden, uncontrolled revaluations because they can destabilize economies, disrupt trade, and create inflationary pressures. Most currency movements happen gradually over extended periods as markets respond to changing economic conditions. The BCSO warning highlights how scammers frequently exploit public interest in foreign currencies by promising unrealistic profits. Investigators say some promoters encourage people to purchase large quantities of Vietnamese Dong, while claiming that banks or governments secretly know a major revaluation is coming soon. Victims are often told they must act immediately before the opportunity disappears. Authorities warn that these pressure tactics are common signs of investment fraud. Financial institutions have reportedly noticed unusual increases in requests from customers seeking to buy foreign currencies based on online rumors rather than legitimate investment planning. Some investors believe they are participating in a once-in-a-lifetime opportunity that will transform small amounts of money into enormous fortunes. Law enforcement officials say scammers sometimes target retirees, inexperienced investors, or individuals facing financial difficulties because they may be more vulnerable to promises of guaranteed wealth. Professional currency traders note that if a major currency adjustment were ever planned by a government, it would typically involve formal policy announcements, economic reforms, and coordination with international financial institutions. Such events would not remain hidden in internet rumor groups or secret online communities. Financial markets are heavily monitored, and large currency movements usually reflect broader economic trends rather than mysterious hidden events. Another important factor influencing the Vietnamese Dong is the strength of the US dollar. Since many global trade transactions are conducted in dollars, changes in US monetary policy often affect emerging market currencies. Rising US interest rates, inflation concerns, and global economic uncertainty can place pressure on developing market currencies, even when their domestic economies are performing relatively well. This means Vietnam's currency outlook depends not only on local economic growth, but also on broader international financial conditions. Analysts say Vietnam has managed its economy carefully in recent years to balance growth and stability. Inflation has remained relatively controlled compared to some other emerging economies, and the government continues encouraging foreign investment while modernizing infrastructure. Vietnam's banking sector has also undergone reforms aimed at strengthening financial stability and improving investor confidence. Tourism recovery has become another important contributor to Vietnam's economic momentum. As international travel continues normalizing after previous global disruptions, Vietnam has seen rising visitor numbers supporting hotels, airlines, restaurants, and local businesses. Increased tourism generates additional foreign currency inflows that can strengthen the country's overall economic position. At the same time, technology investments and digital transformation projects continue expanding across Vietnam's economy. Many younger investors following online currency discussions are attracted by stories of historical currency changes in other countries. Some believe similar events could happen again with the Vietnamese Dong. However, economists explain that every country's economic situation is unique, and historical comparisons are often oversimplified or misleading when used in online investment promotions. The BCSO warning also emphasizes that legitimate investments always involve risk. No credible financial institution can guarantee massive profits from foreign currency speculation. Exchange rates fluctuate based on global market forces, government policies, economic performance, and geopolitical developments. Even professional investors and major financial firms cannot predict currency movements with absolute certainty. Financial educators encourage people interested in foreign exchange markets to study economic fundamentals instead of relying on sensational internet claims. Understanding trade balances, inflation trends, central bank policy, and global capital flows provides a more realistic picture of how currencies behave over time. Experts say informed investing requires patience, research, and awareness of risk rather than expectations of instant wealth. Vietnam's export-driven economy remains one of the strongest growth stories in Southeast Asia. Electronics manufacturing, renewable energy development, semiconductor investments, and logistics expansion have all contributed to rising international confidence in the country's future. Some analysts believe Vietnam could continue becoming increasingly important in global trade networks over the next decade. At the same time, challenges remain. Global economic slowdowns, geopolitical tensions, supply chain disruptions, and international market volatility can all influence Vietnam's growth trajectory. Like all developing economies, Vietnam must balance rapid expansion with financial stability, inflation management, and sustainable development goals. Central banks around the world closely monitor currency movements because extreme volatility can damage economic confidence. Stable exchange rates help businesses plan investments, manage costs, and maintain trade competitiveness. This is one reason governments often avoid sudden dramatic currency changes unless absolutely necessary during extraordinary economic circumstances. The growing popularity of online financial influencers has also contributed to increased speculations surrounding foreign currencies. Some content creators produce dramatic videos claiming insider knowledge about upcoming currency events. Experts warn that viewers should verify information carefully because misleading financial content can spread rapidly online. Authorities advise investors to consult regulated financial professionals before making major investment decisions. Vietnam's leadership continues focusing on long-term economic modernization rather than speculative currency events. Infrastructure expansion, technology innovation, education improvements, renewable energy investment, and international trade integration remain major priorities for the country's development strategy. Economists say these long-term policies are more important indicators of future economic success than internet rumors about sudden currency resets. The State Bank of Vietnam has consistently emphasized monetary stability and controlled financial management. Maintaining investor confidence requires predictable policy decisions and responsible economic planning. Large unexpected currency shocks could create instability for businesses, consumers, and international trade relationships. Meanwhile, some legitimate investors still view the Vietnamese Dong as part of a diversified, long-term emerging market strategy. These investors are generally not expecting overnight riches, but instead believe Vietnam's economy may continue strengthening gradually over many years. Financial advisors explain that there is a major difference between reasonable long-term speculation and unrealistic promises of instant wealth. Experts also note that many currency scam promotions use patriotic or emotional messaging to attract buyers. Promoters sometimes claim global financial systems are about to change completely, or that hidden elite groups are secretly preparing a new economic order. Authorities say such conspiracy-style narratives are commonly used to manipulate emotions and create false urgency. The BCSO warning serves as a reminder that investors should always verify claims through official sources, central bank announcements, government economic reports, international financial organizations, and regulated investment advisors provide more reliable information than anonymous online rumors. Financial scams often thrive during periods of economic uncertainty, when people are searching for opportunities to improve their financial situations quickly. Despite the warnings, interest in Vietnam's economy continues growing globally because the country genuinely has achieved remarkable economic progress. Manufacturing output continues expanding, exports remain strong, and international corporations keep increasing investments throughout the country. Vietnam's young workforce, improving infrastructure, and strategic geographic position provide additional advantages supporting long-term growth potential. Some economists predict that Vietnam could become one of Asia's leading emerging economies over the next 2 decades if current growth trends continue. Rising middle-class consumption, urban development, digital innovation, and regional trade integration may further strengthen economic performance. However, experts caution that economic development is usually measured in years and decades, rather than overnight transformations. Foreign exchange markets are among the largest and most complex financial systems in the world. Trillions of dollars move through currency markets daily as investors, governments, banks, and corporations conduct international transactions. Because of this complexity, dramatic currency changes are relatively rare and typically connected to major economic events or policy decisions. Financial crime investigators say one of the best protections against scams is education. Understanding how financial markets actually work can help investors recognize unrealistic promises. Any investment claiming guaranteed massive returns with little or no risk should be approached carefully. Experts recommend skepticism whenever promoters insist that secret insider information is unavailable through official channels. Vietnam's future economic outlook remains generally positive according to many international analysts. The country continues attracting investment in technology manufacturing, renewable energy, transportation infrastructure, and industrial development. Trade agreements with major global economies could further strengthen export opportunities in the years ahead. At the same time, the international financial environment remains uncertain. Inflation concerns, changing interest rates, geopolitical conflicts, and shifting global trade patterns continue affecting markets worldwide. Vietnam, like all countries, must navigate these challenges carefully while maintaining sustainable economic growth. For viewers following developments surrounding the Vietnamese Dong, financial experts recommend focusing on verified economic indicators rather than sensational online speculation. Economic growth, export performance, foreign investment levels, inflation control, and central bank policies provide more meaningful insight into currency trends than viral internet rumors. Authorities say anyone approached with promises of guaranteed profits from foreign currency investments should conduct independent research before committing money. Investors should ask questions, verify sources, and remain cautious of pressure tactics, encouraging immediate purchases. Legitimate financial opportunities do not require secrecy or emotional manipulation. As discussion surrounding the Vietnamese Dong continues spreading online, the BCSO warning highlights the importance of financial awareness and responsible investing. While Vietnam's economy continues showing strong long-term potential, experts emphasize that sustainable economic growth is very different from the unrealistic overnight wealth scenarios promoted by scammers. For now, global investors will continue watching Vietnam closely as the country expands its role in international trade and manufacturing. Economic reforms, infrastructure projects, technological innovation, and foreign investment will likely remain major drivers of Vietnam's future development. Whether the Vietnamese Dong gradually strengthens over time will depend on real economic performance and global market conditions, rather than internet rumors or conspiracy theories. That is the latest update regarding the Vietnamese Dong exchange rate discussion. The recent warnings from financial authorities and the ongoing debate surrounding currency revaluation claims. As always, investors are encouraged to stay informed, rely on credible financial sources, and approach all high-profit investment promises with caution. Thank you for watching today's report, and stay tuned for more global financial updates, currency market analysis, and international economic news. This video is for informational and educational purposes only. The content shared in this report is based on public news, market analysis, and online discussions. We are not financial advisors, and this video should not be considered investment or financial advice. Always do your own research and consult a licensed financial professional before making any investment decisions involving foreign currencies or financial markets.